Hello, welcome. I'm just going to go ahead and give it a few more minutes to let some others join before we get started for our EEP training today. Thank you. All right. Hello, everyone, and welcome. Today is going to be our EEP training, and I have Norma Summers with me, your account executive. I'm going to now get started and share my screen here.
Hey guys, good morning or good afternoon, wherever you may be.
All right, here we go. My name is Monique Manaya. I am the sales support manager here at Trevisa Financial. I've been in the mortgage industry since 1997, and I've been in all arenas from wholesale, broker, retail, processing, originating, branch manager, but most recently I was the EEP production manager over at this government entity. I ran all of operations. I was on the underwriting guideline committee. So I definitely bring over a wealth of knowledge here to Trevisa in EEP specifically. And then we have Norma Summers. She has provided decades of sales, mortgage. She is very, very knowledgeable in EEP and also traditional mortgage. So combined together, we are here to help serve you and build your pipeline business. One thing about Previsa, and one reason why I definitely wanted to come over here, is because they want to help provide generational wealth through innovative programs. And so offering the EEP program was definitely important to me, because I think that not only does it help serve first-time home buyers, but it just helps those people that don't traditionally qualify for mortgages, and to be able to start to build the wealth that comes with owning your own home and the equity that's involved. So that's why we're going to go over the Earned Equity Program today. We refer to it as EEP. The specific ways that the way that EEP works is you have your home buyer that just does not qualify for traditional mortgage, whether it's their credit, their income, their citizenship status, whatever the situation may be, they don't qualify. So what we're going to do is we're going to get them a pre-approval through the government entity Tule River. And then Tule River is going to purchase the home that they pick on behalf of them. At closing, Tule River will sign the FHA loan docs, but they will also enter into the homeownership agreement with the client, okay, with your home buyer. So this gives your home buyer the homeownership to do whatever they want with the home. They get a 1098 interest statement at the end of the year. And there is either a memorandum that's recorded on title, or there's the full homeownership agreement that's recorded on title. And this is what gives your home buyer the secured interest in the property, knowing that that nobody can come in and take the home away from them. So they definitely feel like they're secured in the home. So to give you a little example on the specifics of the transaction is your home buyer is going to go out, find the home that they want to put under contract. They'll put the earnest money down. And then Tule River will come in as the government entity, and all parties will sign the assignment addendum. Okay, so this assigns Tule River the contract, and then they proceed with the FHA loan that will then pay off the seller of the home. Okay, and then we have the closing to where they will then create that relationship with your home buyer by entering into the seller finance agreement, which is also called the homeownership agreement. So mentioning protecting the client's rights, again, it just basically they have the full rights to use the home, improve it, sell it. They get all of the equity, all of the appreciation, and the tax benefits. They get the tax benefits, again, the 1098 interest statement that's sent to them at the end of the year. So for EEP, we have low down payments at 3.5% for US citizen, non-permanent residents, DACA, ITIN. We have low and no credit scores with alternate trade lines being okay. We have our 3-month bank statement program. You can qualify being self-employed, W-2 or 1099. And the DTI is 50 over 60. We do not source or season of funds to close. So we understand that we have those borrowers that sometimes just don't have the warm and fuzzies of depositing their money into the financial institutions. They like to save all their money at home, and we understand that. And so we don't need to source or season the funds to close. They can save all their funds at home. When you're submitting your TBD homebuyer file for pre-approval, if you are submitting your bank statements and it does not show sufficient funds to close, you'll just want to pop a little letter of explanation or a cover letter, just letting the underwriter know that they're saving their funds at home and that they'll be depositing them later, or if they're getting a gift, because we do allow gifts. Bankruptcies are okay. They can be in a bankruptcy. They can go out and search for their home. Bankruptcy just needs to be discharged 1 day prior to closing, and it needs to be reporting on the credit report. Because Tule River is going to go out and they're going to get their FHA financing through us, Trevisa. We have to go off of FHA property guidelines. So we can do 1 to 2 units, PUDs, condos, manufactured homes, but we need to make sure that the condos are FHA approved. And then we do allow seller contributions of up to 6% of the sales price. We definitely want to note, though, that the seller concessions can only go towards all of the FHA fees on the CD. Tule River has some government entity fees and the first month's payment that they collect. I'll go over those in a second, but the seller contributions cannot go towards those fees. And so gift can. So just making sure that, you're setting up your file properly to make sure that the home buyer has enough funds when it comes time to closing. So for your self-employed borrower, if they are going to use the 3-month bank statement program, we do have a standard expense factor of 45%. Okay, but we do have a tiered expense option. So for any of those borrowers that possibly, they don't have any employees or they're more service related than product related, with a CPA letter or a business license or just, a few different items of documentation, we can get the expense factor all the way down to 10%. So making sure that, you look at your home buyer's business situation, how many employees they have, if they're able to obtain this additional documentation, then again, we can get it all the way down to a 10% expense factor. So when you're qualifying your home buyer and the buyers that you want to look for, you're looking for specifically borrowers that don't qualify for traditional mortgage, whether it be, their ITIN or DACA. We do have the full doc. We do have many different doc types that we allow on this program. We can do a full doc, which would be the prior year W-2, 1-month pay stubs, and a written VOE. We also have our alt doc programs, which would be the 3 months bank statements and a P&L only. Other qualifying considerations would be when you're pulling your credit and our 580 is our minimum score, you're going to want to pull a tri-merge, but if only one major credit bureau pulls up, that's fine. We only need one bureau. We also will allow no scores. So if you pull your trade lines, no scores pop up. We still need you to submit that credit report, but we can go ahead and take it with no scores. We will just need one alternative trade line, 0 times 30 over 12 months. Our verification of rent is super important. We need a verification of rent over 12 months. And then also we only need to show employment over 12 months. So if they have longer, great, let's fully document the file for strength. But at the same time, if they only have 12 months, then that's perfectly fine. And again, our max DTI is 50 over 60. For assets, we need 2 months bank statements. Obviously, if you're going to go the 3-month bank statements, then we'll use all of those. But if you have somebody who's self-employed that has business bank statements for income documentation, we'll use 3 for that. And then they're going to use personal bank statements for funds to close, then we only need 2 months. We also have, again, gift funds are allowed and no source or seasoning of funds to close. So super, super important to remember that. When we are qualifying the property, there's a few things that you definitely want to remember. Not only do we go off of all FHA property types, we are going to order a FHA appraisal. So if it comes back subject to, we're going to need those repairs made with a 1004D. The government entity has an overlay in 35 states where they require the pest termite inspection. So getting that ordered, sooner than later is definitely important. And then for the property, if the property is a 1978 or older, and or if your appraisal comes back and the condition is a C4 or greater, then we need a home inspection, okay? If we do need a home inspection, then we also need a certified home warranty with roof coverage. So just keep in mind that the government entity's underwriter will review the home inspection. Any major safety items will need to be repaired prior to close. They do have cure agreements, 3 and 6 month cure agreements. So if, for some reason there's some other items that they'd like to see repaired, but they're not going to hold up closing, they can put those on the cure agreement. Aluminum wiring is ineligible. And then we just want to make sure that all major systems are in working order. So going over the funds to close, we essentially how it's going to work is we are going to take the bottom line from the FHA final closing disclosure. Okay, so with that being said, we have to meet MRI, which is the minimum required investment. So we have our 3.5% down minus earnest money. That's our MRI. That is the minimum required down payment on this FHA file for Tule River. So with that being said, we want to try to utilize all of that 6% in seller closing costs and have all of those fees paid to bring down the bottom line on the FHA CD as low as possible. So then we take that bottom line and we add it. The government entity has a form called an ICCD. It's an initial consumer cost disclosure. We're going to take that bottom line from the CD and we're going to add that to the initial consumer cost disclosure. And then they're going to add the first month's payment, which consists of Tule River's 30-year fixed total payment plus their servicing fee, which is 0.5% times total loan amount divided by 12. Okay. And then the entity has some of their own closing costs, which is $12.50 underwriting processing fee, $1.50 notary fee, 0.5% homeownership agreement fee. If the property is in an HOA or a PUD, then they charge $2.50. And then their fees differ a little bit in Texas, but they will take all three of these fees, add them together, and this is going to be your home buyer's bottom line for funds, total funds to close, okay? So as I had mentioned, seller concessions cannot go towards the first month payment or the entity fees, but a gift can, okay? So you can get a gift to go over the first month's payment to cover the first month's payment and the entity fees. The servicing fee is on every single payment moving forward. Tule River has a servicing department that is amazing for your home buyers for after the transaction closes and they need somewhere to go to for information, how-tos. They will send out monthly mortgage statements. They'll send out the 1098 interest statements. I've had some that have had issues with getting utilities turned on or transferred, and this servicing department is, I mean, they're a very important key factor for your home buyer after closing, and so this servicing fee is continuously charged on a monthly basis. Okay. Okay, and then you guys just hang tight with me. We're going to go over questions in just a bit at the very end, okay? The 40-year EEP structure. So the home buyer is going to make the government entity's 30-year mortgage fixed payment along with that servicing fee, okay? So the way that the program is designed is so that there's no shared equity and there's no back end split. Okay. So when your home buyer goes to assume the loan or sell the home, all of the equity is theirs. So they have it set up basically as a pay as you go model versus taking the appreciation later. They charge a small fee up front. And then there's, the small differential from the 30-year versus the 40-year structure on the homeownership agreement. So that enables the home buyer to take 100% appreciation. So this helps support the tribal growth, their revenue, and their asset growth to continue this program for everybody out there that wants to use it, okay? So again, the home buyer is going to pay the 30-year fixed FHA payment with the servicing fee. And then the payment for your home buyer is spread over 40 years on the homeownership agreement versus the 30-year FHA. So this creates a fixed monthly differential. So this differential is going to be booked as an asset for the tribe. Okay, this is how they're going to then be able to make additional money. They're not going to receive it monthly. They're not going to receive it until the home buyer decides to exit the program. But this allows the home buyer to keep 100% of the appreciation. The program is flexible, so they can make extra payments to reduce the principal faster. So what this ends up being is that it's a slower initial principal reduction versus the FHA loan going down a little bit quicker. At closing, when they're signing the final consumer cost disclosure and the homeownership agreement, they will receive an amortization spread over those 40 years. So they can definitely see how their balance is going down. And so this is more designed as a appreciation focused ownership path. And so it balances the tribal's financial objectives with homebuyer wealth building. It's a win-win for both. It's a strong alternative for buyers that are unable to qualify for FHA. So the tribe needs a reason to go out and purchase homes for people. Um, and this 40-year EEP structure for the homeownership agreement is the way that they determined that they won't charge a large up front that prevents people from getting into the homes because they have to come up with so much. And then they won't take a lot of the appreciation at the back. So it's this setup of a 40-year structure on the homeownership agreement is actually a very, very smart plan. Again, because we're going to be recording documents on title, it really secures your client's rights. The the um, the tribe is not an individual that could be taking payments, pocketing, and then walking off and letting the home go in foreclosure. It's a very sound program where the government entity is, building a program with servicing department with protections for the home buyer. And like I said, the memorandum's recorded or the full homeownership is recorded on title. So your home buyer feeling confident that their rights are being protected and that this is their home is super important. Okay, so tips and tricks for a smoother submission. Cover letters are super important. You know the story of your file. You want to make sure that the underwriter over at Tule River does too. It's going to give you a better approval. And, especially if you're letting them know your specific income structure, what's going on there, the assets, are they getting a gift? Have they been saving their money at home? Having your 1003 completely filled out with addresses, phone numbers, declarations. Unfortunately, the pre-processors over at the government entity will push the file back if these things are missing. So, let's make sure that your 1003 is completely filled out. And then letter of explanations and using income calculation worksheets to, make sure that you're pointing out how you calculated your income. If you're using the 3-month bank statement program, I would highly recommend, because you might actually get conditioned to do this anyways, I would highly recommend to notate and indicate on the bank statements which deposits are income related. You can do that by highlighting each deposit, or even, if you need to print them out and make a star next to them, and then using that income calculation worksheet is very, very important. Also, a letter of explanation if your home buyer has a home that they're going to keep and retain, so that the underwriter knows the disposition of the home. They do allow a home to be retained, although the guidelines are a little bit more strict in that aspect, to where they reduce the DTI 40/50 and 3 months reserves. They require 3 months reserves if they're going to retain their home. So if you have any questions on guidelines or scenarios, please feel free to reach out to myself or Norma. We also have resources that I'll get to in just a second. Setting the proper expectations is super important because there are two files. You are going to have your homebuyer TBD file, which is file number 1. We also call it phase 1. And then after they go under contract, you're going to have your file number 2, which is phase 2. This is going to be your Tule River subject property file. Okay. You're going to have 2 approvals you're working with. And so setting the proper expectations is very important as far as timelines. Luckily, the Tule River approval through Trevisa is just property related because they do not need to credit income or asset qualify. But also with the property possibly needing inspections, and then closing. This is not a same day close and fund. There are packages being overnighted. If they miss the cutoff time, there's wires being transferred all over. Your home buyer is going to wire their final funds to close amount to Tule River. As soon as Tule River has confirmed they've received it, they will then retain their portion of fees and first month payment and then wire over to title company. So, there's wire cutoff times. As long as, everything flows smoothly, it's usually a close and then fund 2 days later, except in Texas. But making sure that you're setting the proper expectations, super, super important. When I was running EEP, the average closing was about 37 days. I would say now we're at about 30 to 45 days. This also depends on how complex your file is, how complex the property is. If you need repairs, we may need extensions. So keeping sure that everybody is aware at the beginning that this is not a traditional loan. Okay. Just a few items that are very critical components so that we make sure that you have a successful EEP file and you can get those ones closed as soon as possible. Is when you are submitting your home buyer TBD file, we have to have the pre-approval checklist. There is a referral at the bottom. When we're uploading the file over to Tule River's portal, we need to have that referral contact information or else we get a hard stop. So making sure that that is uploaded, super important. Because Tule River is obtaining an FHA loan, we are bound by FHA county loan limits. So checking your loan limits for where the county is located. Again, if the borrower is retaining an existing property, you've got lower DTI, 3 months reserves. Once you go under contract and your home buyer has deposited the earnest money, if that assignment addendum is not signed by all parties and you've triggered your file, your disclosures won't go out until everybody has signed. We can get signatures from Tule River, but starting your file too soon before that assignment addendum is not signed can cause delays. Making sure that when you are disclosing on your Tule River subject property file and you've selected lender paid, that's how it's disclosed. You cannot change it mid-loan. Okay. So you disclose lender paid, you lock lender paid. Same with borrower paid. The tiered expense ratio, it does require a CPA letter. Seller credits cannot cover the entity fees. Only FHA approved condos. Hazard insurance companies, you can procure your own insurance, although I would suggest just to obtain it through the entity. Obtaining your own hazard insurance can be a 2 to 3 week approval process. There's some forms that you, the home buyer, and the agent need to sign. If the agent doesn't get this form until the end and they've discovered that there's information within this form that won't allow them to sign it, then we've just delayed and lost some time there. So also approved title companies, we have an approved title list. It's uploaded in TPO Connect. You need to make sure that it's the actual the company that's providing the title insurance. Okay, so it's not necessarily the attorney or the escrow officer that needs to be approved. It's whoever the company is that is providing title insurance. We have a lot of major companies on that list, such as First American, Westcor, Ticor, Landmark, and many more. The termite inspection overlay in 35 states, and the property inspection. If you have to have a property inspection, you also need the home warranty with roof coverage. Okay. So if you're out there doing I-10 loans, if we look at our competitive market here with our earned equity program, we only require the 3.5% down versus 15 to 20, 3 months bank statements versus 12 to 24. Our max DTI is 50 over 60 versus 43. And then if you want to go higher, a lot of times you need comp factors on their end. And then we only require one major credit bureau, and it only needs to be a 580 or higher, where other lenders require 700 or higher. So our EEP is definitely the most competitive program out there on the I-10 market. So I was going to let you know we have our EEP support center. So we have our phone line here and our EEP questions at trevisafinancial.com. Both of these, the website and the phone line, both come to me. So I do these trainings. And so if you call and I'm not able to answer, please send me an email. That's probably the easiest and the quickest way for me to get back to you. You can email into this EEP questions at trevisafinancial.com, or you can just email to my personal email, which is mmanaya at trevisafinancial.com. You can also email Norma Summers as well. And we have our resources for you. So not only do we have those EEP hotlines, we do our weekly trainings that you can do a Q&A after. We can also set up private trainings if you wanted to involve your operations and give them trainings on the TPO Connect. We do the TPO Connect trainings Tuesdays and Thursdays at 9:30 Pacific Standard Time. We have flyers available. So if you want to have any of these flyers made with your company name and your photo, if you want to promote and sell EEP, we would love to get these made for you. All right, it is time for our Q&A. So let's go back and see what questions we have. So one of the questions I have is, can the gift be from the seller for the entity fees? I had actually asked that question over at the government entity, and the response I had was that they do not have any restrictions on who the gift can come from currently. Some examples, somebody asked, what are some examples of an alt trade line? So you can use cell phone, major utility bills, auto insurance. I had somebody that wanted to use a gym membership, and they actually got okay to use a gym membership as long as they can provide a 12-month history and it's 0 times 30, then they'll usually typically take anything as long as it's properly documented. Okay. Okay, so somebody has a question more about the 30-year mortgage that the government entity takes out to buy the house versus the 40-year homeownership agreement, the differential for each payment. How does it work when the borrower does the refi or assumes the FHA loan? Is there an impact then? So when the home buyer goes to assume the FHA loan, there is going to be a slight differential because the 30-year fixed is going down more than the 40. Okay, so let me give you an example. When I was over the entity and I had a home buyer that had been in the home for about 18 months and they were assuming the government entity's FHA loan, the difference that they had to bring in from the differential from the monthly amount accumulating over 18 months, it was like $2,400 ish. It also depends on rate and loan amount, of course. And so they had just saved up that money over time. So you could always recommend to your home buyer that they're, putting some money away, or that they're making extra principal payment, because then that can eliminate that when it is their time to assume the FHA's loan. If they are selling the home, then that can get taken out of their equity portion. Okay. Did that answer your question, or does anybody else have any other questions? So to refinance to conventional, that's a very good question, because the government entity, we discussed this several times when I was over there. Specifically, one of the board of directors, the creator of the program, and I discussed it several times. And the situation is that you would need to find a lender out there, possibly non-QM, that would recognize the recorded homeownership agreement and their payment history to treat it as a refinance, because they are not going to be vested on title. Okay. So, um, so either I know that the government entity, they're currently, asking questions and looking to see if there's any lenders out there that would treat these type of documents as a refinance. I know back in the day when, early 2000s, when seller contracts were really popular, there were some non-QM that came out that that would treat these as refinances with the payment history, minimum 12-month payment history, and then the recorded document on title. So like I said, currently the government entity is out, inquiring to see if they come up with anybody. This program is getting more and more popular. It's only been around for about 3 years now. And so the more popular it becomes, you might have some of those non-QM lenders that are going to come out there and say, hey, let's create a program for these people specifically to exit out of the program. But as for right now, assuming the FHA loan or selling the property are going to be your best bets. Good. Somebody had just said that this helped me a lot. Thank you. I'm so glad. That's why we have these trainings, is we want to make sure that you're fully understanding of EEP when you're going out and selling it, because we want to make sure that you're fully educated when you're passing the information on to your home buyer. So if there are any questions that come up after, please reach out to Norma or myself. I know that I'm that way. I'll get off of some sort of a training or a meeting, and a few hours later, a new question pops up. So do not ever hesitate to reach out to us. We're here for you. Again, we want to make sure that you guys have successful EEP pipeline. And not only that, but we have amazing rates on our conventional and FHA programs. We also have great DPA programs where we have 3.5% and 5% down. We also have non-repayable DPA programs. So you can reach out to Norma if you're interested in those programs as well. But that's all I have for today. All right, everybody, have such a wonderful day. And again, reach out if you have any questions. I'm so glad you guys made it. Thank you. Yep, thanks, everybody. Bye-bye.